In a world where financial crises are lurking around every corner, it's time to face the harsh reality. Things might get much worse than you think. A global financial storm is brewing, and the almighty dollar might lose its crown as the world's preferred currency. Welcome to Wealthway. Join us in this eye-opening video as we delve deep into the secrets behind the current crisis and reveal what you can do to safeguard your financial future. The recent bank crashes at Silicon Valley Bank and Signature Bank are just the tip of the iceberg. These institutions fell victim to poor risk management, but they won't be the last. Banks across the US like First Republic Bank, Huntington Bank, KeyCorp, Co-America, and Truist Financial are treading on thin ice due to excessive risk-taking. The financial crisis is already knocking at our door, and it's essential to understand its roots. Let's dive deeper into the Silicon Valley Bank situation to understand why it's not just an isolated incident. It's a reflection of the broader economic landscape. Inflation and debt creation are major culprits, and these issues extend beyond the banking sector. Inflation is affecting every facet of our lives, from the cost of groceries to the price of fuel. Inflation is a complex beast with two sides: demand and supply. Demand-side inflation, also known as cost-push inflation, occurs when production costs rise, leading to decreased supply. Factors like the Russia-Ukraine war have disrupted the global supply chain, resulting in food and energy inflation that hits consumers hard. On the flip side, supply-induced inflation is the result of rising production costs, especially due to increased fuel prices. This affects everything from manufacturing to logistics, driving up the prices of goods and services, making your hard-earned money seem to disappear faster. Inflation numbers haven't been this high in over 40 years. It might continue to rise unless the government can control it. The impact of high inflation is far-reaching, affecting your everyday life and future financial stability. The real threat lies in demand-induced inflation, which is triggered by panic buying. When consumers fear rising prices, they rush to buy, straining already weak supplies, causing prices to spiral even further. This vicious cycle can wreak havoc on your financial well-being. To combat inflation, the government is raising interest rates, discouraging borrowing and spending. While this might curb inflation, it can also lead to a recession, unemployment, and economic downturns that impact you and your community. Remember the 2008 housing bubble burst? We might be heading for a similar recession and financial crisis, but this time, it could be worse. It's essential to prepare for the storm that's on the horizon. The US dollar, long the world's reserve currency, faces numerous threats. Emerging economies represented by BRICS are exploring alternatives to the dollar, signaling a potential shift in global economic power. The dollar's reign as the world's reserve currency has lasted for a century, but it's overstayed its welcome. Poor government policies, including excessive spending, have weakened its position, putting your financial security at risk. The US government's excessive spending, especially during the pandemic, involved printing vast amounts of money. This has contributed to the recession we're experiencing today, affecting your job security and future prospects. The petrodollar agreement, established in 1974 with Saudi Arabia, helped maintain the dollar's dominance. However, recent shifts in international trade indicate a potential shift away from the dollar, raising questions about its future as the world's reserve currency. China and other nations are transitioning to using their currencies for international trade, challenging the dollar's supremacy. The common people of America may bear the brunt of this change if they're not adequately prepared. Protecting your wealth is paramount in times of economic uncertainty. To safeguard your financial future, it's crucial to explore investment options that offer resilience and stability. Among the most reliable choices are precious metals like gold and silver. These assets have proven their worth over centuries and historically shine brightly during financial crises. Gold and silver, often referred to as real money, possess intrinsic value that sets them apart from flat currencies. Unlike paper money or digital currencies that can be manipulated by governments or central banks, the value of gold and silver remains relatively stable. They have been universally recognized as a measure of worth and exchange since ancient times, serving as a store of wealth for individuals and nations alike. Gold, in particular, has held its value through millennia. It's often considered a hedge against inflation, currency devaluation, and economic turmoil. During times of crisis, the demand for gold typically surges, driving up its price and providing investors with a safe haven for their hard-earned money. Silver, while sharing many characteristics with gold, offers additional versatility. It has extensive industrial applications, making it essential in various technologies. This dual demand, both as a precious metal and an industrial commodity, can further bolster its value during uncertain times. Diversifying your portfolio to include gold and silver can act as a financial insurance policy, helping you weather economic storms and potentially even thrive. These metals not only retain their value, but often appreciate when other assets are underperforming. They serve as a buffer against the erosion of your purchasing power, allowing you to maintain your standard of living even in the face of economic turbulence. In today's economic climate, where volatility and uncertainty seem to be the new normal, making prudent investment decisions is more critical than ever. While precious metals like gold and silver offer a solid foundation for your wealth protection strategy, it's also essential to diversify your investments. Consider assets that have a historical track record of thriving during economic downturns, such as real estate. Real estate investments, when carefully chosen, can provide stable income streams and potential appreciation in value over time. Rental properties, for instance, can offer a consistent source of passive income, even in challenging economic environments. Additionally, exploring opportunities in stocks and bonds should not be overlooked. While the stock market can experience significant volatility, investing in well-established companies with strong fundamentals can yield attractive returns over the long term. Bonds, particularly government or high-quality corporate bonds, can provide a reliable income stream and act as a counterbalance to riskier assets. The key to wise investing during economic uncertainty is diversification. Spreading your investments across various asset classes can help mitigate risk while potentially increasing your overall returns. Remember that your investment decisions today can have a profound impact on your financial security in the years to come. So approach them with careful consideration and a long-term perspective. The impending financial crisis isn't just a recession, it's a liquidity crisis. Prepare for a severe recession, potential social unrest, and a global financial liquidity crisis that could impact your access to funds. In conclusion, the financial landscape is shifting, and it's crucial to adapt to protect your wealth and financial well-being. Invest wisely, diversify your assets, and stay informed. The storm is coming, but with the right preparations and knowledge, you can weather it successfully. Thanks for watching, and don't forget to like, subscribe, and share this video with others who need to know. Stay financially savvy, and until next time, take care.